altering as the EU leaving, or the UK leaving the EU. It kind of really disheartens me that we can have so many kind of facts and things like David Cameron saying the average family holiday will cost £230 more if we leave the EU. It's just nonsense, absolute nonsense. So I'm going to try and tell you a few kind of facts, figures, what the media's been saying. We'll try and put it all together. We're going to show you some markets. Going to show you the charts, what the actual real people are putting the money where the mouth is. And I guess any questions you've got, any thoughts you've got, as always, it's an open. It's an open webinar. You can ask me anything you want. I've got entitled to my opinions, just like everybody else's. And I know more than the average man on the street, but I've got no idea what's going to happen if the UK were to leave the European Union in its entirety. Nobody does. But I tell you what, it's increasingly unlikely with Project Fear basically coming out with nonsense, but more credible nonsense than the vote to leave. They're just not saying anything. So, got to be interesting. So before I start, as always, the risk warning. Remember that spread betting and CFD trading are leveraged products and such carry high level risk to your capital. These can result in losses that exceed your initial deposit. Someone's changed my risk warning. Ha! Why do I not get told these things? These products may be suitable for all investors. CFDs are not suitable for pension building and income. Ensure you fully understand the risks involved and seek independent financial advice if necessary. The information and comments provided here under no circumstances are to be considered or offer solicitation to invest. Nothing here should be issued investment advice. The information provided is believed to be accurate. The data is produced. Education only. Content of the webinars, post opinion of the moderator at Intertrader.com. Intertrader Direct. The content does not constitute financial investment or tax advice. Intertrader Direct is not eligible to the comments during the session. Right, there we go. So, what is Brexit? Well, the UK is set to hold a referendum, in or out, this summer, whether there should be an exit or a Brexit from the EU. So, very much like we were talking about the Grexit when there's all the problems with Greece. But luckily, all that's solved, isn't it? All we do is give Greece a bit more money, buy them a little tiny bit more time, and Greece will be fixed. So when we talked about Grexit, that was Greek exiting the European Union. Right now, we're focusing on Brexit. So this is not being forced out. This is an open referendum, to the people of the UK to see if they want to stay inside the EU. So it's Britain's membership of the EU, and it's going to be all concluded, well, as far as ever can be, but it's all going to be, the vote's going to be cast, and we're going to know what the result is on Thursday, the 23rd of June. So basically, anyone who is a British, Irish, and Commonwealth citizen who lives in the UK, and people that have lived abroad for less than 15 years can vote. That's it. I mean, this is really it. We've been given an array of stats, an array of options, an array of alternative scenarios. But the fact of the matter is, what we're voting for is, do we want to remain a member of the European Union, and all the pros and cons that come with that. So why the hype? Well, any referendum gives the voter the choice. It's a major political decision. And I guess the most notable referendum, which again, on FX Street, I've done webinars on, and again, called it, and that was the Scottish independence from the UK. And really, when we're ever looking at trading, we're looking at, kind of charting or things that major events have happened in the past. It's very difficult to, especially when you're doing the fundamental side of it, and you're doing it, through people's opinions and news and the unknowns, is to get any parallels. And we're fairly lucky in this respect that we've got a very recent parallel of people voting to stay in a union or to get out of a union. So, we've been in the union for the EU since, 1975, whatever it is. We've been in, the union with the UK, as in the United Kingdom, with Scotland, Wales, Ireland, etc., for a damn sight longer. So you've got to think, what were people thinking in Scotland? What were they thinking? Why would they want independence from the UK? What were the pros for them? Then what were the cons? And remember, people are just people. 99% out there are just sheep. They want to be told what to do. They don't want to be frightened. They just want to have a nice, easy, comfortable life. So when you're making big choices, like leaving the safety of a union, then there's going to be some consequences. What are the real consequences? As I said, nobody really knows. But what we're looking at right now is, will people, like they did in Scotland, vote to stay in or leave? Scottish people voted to stay in. There were consequences, and there was certainly ramifications on the markets on the lead-up when we thought Scotland was going to leave. And we'll show you some charts of sterling. But realistically, people voted with their heads, not their hearts. They didn't really like the idea of uncertainty, and any change equals uncertainty. And that's really what we're looking at now. Boris Johnson, let's get control of our borders back. Let's leave the EU. Let's get, some sense of control back to the UK. David Cameron, fear. Your house is going to be worth less. Your borrowing costs are going to go up. Your holiday's going to cost more. Food's going to cost more. Pretty unsubstantiated, but he's the guy we voted to come in. So he's the leader of the UK. He wants to stay in. It seems that all his friends in the news wires want to stay in, and that really is what Project Fear is all about. Trying to tell you all the negative sides, and unfortunately, the kind of pro, vote for independence side don't seem to be coming up with even any kind of decent facts or figures. So it's pretty looking one-sided, and has done since the start, to be honest. So the Scottish referendum give people these insights into political tactics and how they swayed it. It was not a dirty campaign by any stretch of the imagination. You had Alex Salmond, on one side and Nicola Sturgeon on the other, and a whole raft of politicians putting their, kind of spin on things. But really, what you're trying to do is trying to connect quite a complex set of ideals and ideas to the general public. And it really is very, very difficult to break these things down, because there is, as I say, no simple answer, and there is no simple way to say yes, you're going to be better, or yes, you're going to be worse. It's different things to different people. So really, when I was looking at the Scottish vote and what would happen, when I was interviewed by Reuters, etc., etc., I was basically looking at not the facts as such. I was looking at some basic facts that would affect basic people. And going back to things that I've written in my books, we're all essentially the same. Okay, we haven't really evolved that much since we were cavemen. When we were cavemen, we wanted to protect our families with, big pointy sticks and catching the biggest dinosaur. And now we protect people with money, with assets, with houses. But the basic core is you want the best for you and yours. Simple. So what situation is going to lead to that being enhanced or detracted from? So all the things that are going to detract from, especially with the Scottish vote, was changes to the mortgage rates. So if Scotland gets its independence from the UK, there is a very, very strong chance the mortgage rates would go up. Now, 1 in 4 people couldn't afford a £50 rise in their mortgage per month. So you tell me, are you going to vote for independence if you've got a house and you can't afford £50 a month? Not a lot of money, okay? And, again, these statistics are statistics I got from varying sources, but if you breaking it down to its absolute minimum, we all know that houses are expensive. We all know people are currently over borrowing. We know that interest rates are historically low, so the chances are interest rates would be affecting people's borrowing. So that was a big fear thing. People didn't want change, so they remain. Can we see any parallel between that and the UK? Well, UK leaving, obviously the rest of the UK, expanded upon, and any problems with interest rates, any problems with borrowing costs if we left the EU? Well, obviously, there's an absolute direct parallel there. That if people were frightened in Scotland, then people in the UK as a whole will be frightened, because a lot of people own property and a lot of people are overstretched with debt. But back to the kind of Scotland, argument. There's a, possibility of loss of UK subsidies, the change in banking regulations, job security, change to pensions, all these kind of different things, with the fear. And all the kind of good things were get control over your budget. Go on, Scotland, run it however you want. Increase the public sector, give people free money, do whatever you want. You get control of your North Sea oil revenues. So instead of splitting that with the UK, you get it all. Well, I'll tell you what, look at the hindsight with what's happened to oil. Would Scotland be better off or worse off if they were independent now? That's right, they'd be a lot worse off. So you can get better public services because you spend the money what you want. Autonomy, no Westminster, and the ability to make your own trade deals, be out in the world and do whatever Scotland does and whatever it wants to do. Now, you see the guys running around the council estates with their face painted, reenacting Braveheart, freedom, that's what we want. These aren't people that vote. The people that vote are your steady eddies, your doctors, your teachers, your people with something to lose. Now, what have we got more in the UK? People sat in council estates voting for the BNP, or people voting, to get out of the EU because they don't really understand anything? Or are we going to let people that make a rational decision based upon not many facts, to be honest, but making a rational decision that's probably better the devil you know and has something to lose, and they actually vote for the Remain? So this is the parallels we've got to think. Okay, all the way leading up to the Scotland vote, there was this increasing fear they were going to leave. That effect on stock markets, the pound, etc. When it came down to it, it was a bit of a landslide. Okay, the no vote and Remain was the winner. So we're learning from the past at all times. Look at all these pretty faces. You've got Nicola Sturgeon, Alex Salmon, versus Boris Johnson and David Cameron. Who do we believe? Who's more trustworthy? Is it about trust anymore? Is it about believing these politicians want the best for us? I really don't know anymore. But what we're trying to do is take the emotion out of it, take the kind of fear side out of it, the greed side out of it, and just try and understand how people will vote. And if we look back to Scotland, people voted with their heads. They did not want any disruption to their way of life. They didn't want anything major to change. And that goes from employment to borrowing, to actually the political system itself. They weren't brave enough to make that call, and people stayed. So learning from the past, predicting the future. Scotland didn't want to leave the UK. Then what's the chance of the UK leaving the European Union based on the same principles? Okay, starting to really add up now, isn't it? So this is the impact when we're talking about the Scottish vote, etc. I mean, as the media, as they always do, get excited and try and put their sway on things. This was happened to to the euro dollar. Sorry, the pound. So cable. So what we see is a small blip down when it looked actually like the yes vote was starting to gain a surprise momentum. And a lot of the papers jumped on this, a lot of the kind of news wires, and all of a sudden it was sensationalized, absolutely sensationalized that all of a sudden Scotland were looking ever more increasing to get their independence, and this was the time. So you see a gap in a technical chart until it's closed. We know it has a lot of momentum. So it kind of moves lower, but then we finally close the gap. But then all of a sudden, some new polls come out. Some new polls come out putting the yes vote much further ahead, and then look at the difference in gap. Because we've experienced the previous news gap that yes, if Scotland leave, bad for the UK, bad for the pound, so we sell it off. But then as that news comes to the market again, we have another shock to the populace opinion. The market isn't ready for it, and we see quite a substantial drop in the value of the pound. So that again is trying to mirror what's happened in the past for all sorts of different things from the Treasury, from George Osborne, etc., saying that we could lose up to 10% of the value of sterling. Well, I mean, it's not necessarily a bad thing, to have a cheaper pound for a time being. So if we stay in the European Union, is the pound going to spike up? So is having a stronger pound actually any good for exports? Yeah, is any good for kind of for the other kind of balances of a round economy. We can't just say that one side is completely bad and one side is completely good. There is no real right or wrong here, especially for the complex markets that we all trade. So as we say, with an 84.6% turnout, people that could vote, it was not a landslide, but it was about as much as a landslide as you're going to get. If you've got everybody, pretty much in Scotland turning out, having an interest in politics, then that's it. 44.7%, yeah, let's leave, and 55.3% said no. So there we go. Absolutely done. And what can we say to that? Now, it's a reversal in the sentiment that the majority of people thought no would win. And that's what we saw the upset in the markets, because a lot of people before they started poo-pooed it and just said, yes, of course Scotland won't leave. What have they got to benefit? And then as the media got involved, as the hype got involved, all of a sudden people saying, yeah, actually, this could be a reality. But the reality is the reality of people. It's understanding the market sentiment. Okay, we'd all love to see a sensational, well, I don't think we'd like to see it, but we'd all like to see these big historical moments when the underdog won or the absolute unconceivable happened. And that's just our human nature. We probably wouldn't like it in reality, but we all secretly sit there and think, well, it'd be quite interesting, wouldn't it? We left the EU, it'd be quite interesting for a few weeks. But what's really going to change? Realistically, the European Union is one of our biggest trading partners. They buy a lot of stuff from us. Our cars, our produce, our services. They're not just going to shoot themselves in the foot. Don't know if you've read a paper lately, but the EU's not exactly smashing it right now. And what's going to change with the US? We've bent over backwards and sold our soul to the US time and time again. They owe us. We're not going to get put back to the trade deal. We're not going to get put back to the back of the queue. We're not going to do anything. United States have to honour its promise. And, after we've, purged ourselves and gone into war over America, they need to stick by us. And that is for sure. So what is really going to change? Probably very, very little on the reality side. So again, Brexit, we're fortunate that we have recent events that we can look back on and see how they affected the markets, see how it affected people and see what the outcome was. So what we're trying to do now is just do our fundamental research and try and be as unbiased as we can and try and figure out how we can make some money. That's what it's all about. We can all vote, we can all put our little stamp on for a yes or a no, but realistically, like I said, once you've done that, the control's out of your hands. What will the future implications be if we stay or we leave? Very, very complex. It's going to take a long time to sort out. But in the short term, things are going to happen in the markets, aren't they? Demand for the FTSE is going to be in question. Demand for, the pound's going to be in question. Will we see an impact on gold? What will happen, to other correlated markets? And this is the thing we're trying to figure out by Brexit, by yes or no. The reality is nobody knows what's going to happen in the event of a Brexit. And I do mean nobody. I do mean nobody. Nobody. Doesn't matter from the IMF. Doesn't matter if you're from, the Treasury, the Bank of England, you Mark Carney, Mario Draghi, Janet Yellen. Nobody knows. People can't even predict GDP. They can't even reliably predict GDP on a quarter-by-quarter basis. How would you possibly be able to predict what's going to happen to all these complicated markets on the back of this vote? You can't. So the speculation is all the unknown, and all that plays into the hands of the Remain campaign. Yeah, we don't know exactly, but it could be this. We can't put a figure on this exactly, but it could be this. So your house might go down by 18%. Where have you come up with that from? 18%. How have you come up with that figure? It's just utter nonsense. Now, we all trust these people because the reality is it's more frightening not to be able to trust them than to trust them. But let's face it, all these kind of speculative things that that have been said by the Remain campaign are by people who voted in, and these are the people bringing the austerity measures in, trying to cut the deficit. They've got a tough job as it is. They're not really wanting the extra workload of having, a UK where we have to start doing trade deals and have to do all these other bits of work. And let's face it, David Cameron is off soon. So who's going to take over the reins? This is what really annoys me about politics as a whole. You've got people making decisions like Janet Yellen messing around with interest rates in the US for years and years. Janet Yellen will probably put interest rates up 2 times this year, and then in a couple of years she'll probably retire. She'll retire, she's an old woman, she's 67. She'll retire to a big house. She'll have a nice kind of, jobs where she goes and speaks for, $20,000 a time at universities. Happy days, happy days. Making decisions, that impact future generations that she'll never be around to see. Nobody has any accountability. And that's just what's happening now. In 1975, a lot of people did a vote to join the EU. We're smart enough not to join the single currency, but them same people are still around that are voting now. And they don't want change. They want the house price to stay the same, and they don't want to be seen to be wrong. So, yeah, who over the last kind of 20, 30 years, or this millennial generation, has anything to lose? None of them. But then millennials don't vote. So it's going to be the same people that voted for the EU experiment to stay in just because they want to, A, save face, and B, these are the kind of people that don't want change. There's not enough people that want change that actually vote. So remember, markets are always reacting to some sort of fear and greed. So we've read the fundamental facts, trusted commentary to make up our own minds on what we think will happen. Then we look at the technicals. We look at what the market's actually doing. What's buying, what's selling, what are people doing with their money? And again, as I've said to you, you look at these sensationalism. Not that I ever trust the Sun for any of my, realistic, or quoted news sources. I only really kind of read newspapers I've been quoted in. So that's the Daily Mail, Financial Times, the Times, the Wall Street Journal. Basically name any, trusted broadsheet. I've never been quoted in the Sun. There we go. I don't read it. I'm not interested in it. But it doesn't mean that it isn't part of the circus and the pageantry of what's happening right now. The Queen backs Brexit. No, she doesn't. It's just nonsense. But these are the things that really can shift the balance and sway, on the fence voters. And it's just the world we live in. So most important part of fundamental analysis is understanding yourself. So what do you think? You're going to vote. You've got an idea. You come to FX Street webinars. I'm sure you trade your own account. You've got just as much right to have an opinion as anybody else. Very difficult as a human being, though, to remain completely impartial. Everybody will have some sort of feeling towards it. And it might even be an unconscious one. So when we talk about the fundamentals, it's very important that we stick to what we know is True, and that is the technical side, looking at the charts and doing things for the right reasons, not trading with your heart and not jumping in on the back of what doesn't actually exist. And the way you do this by self-talk, you have to ask yourself questions. Ask yourself why. Why are you buying the pound? Is that because you think everyone's going to stay because that's what you've been told and that's what the popular vote is? Or is that what Betfair is saying? There's only a 20% chance we leave. Still a 20% chance. Again, understand why you're trading, understand the reasons why you're pressing that button. So we look at David Cameron. He's saying millions of jobs are linked to the EU membership. Some of Britain's biggest trading partners are in the EU. It's easy for everybody to work and travel abroad. Works both ways. We assist in fighting crime being the EU, and we have better influence in the world. So this is the main reasons we should stay in the EU. Okay, that's because David Cameron, someone we trust, our Prime Minister, said this is what it's all about. And then we've got people like Boris Johnson, Nigel Farage, and they're saying we should leave. And we should leave because we take back control of our borders. Okay, that's been a mixed one. And again, it's more complex than it seems. But I guess, yeah, there are some arguments for that. We could make a large membership saving fee. Different things have been banded around. Anywhere between 350 million a week, whatever other figure you want to put on it. But let's face it, it costs a lot of money to be in the EU. The institutions are seen as lacking democracy. Again, we all know about the bureaucracy in Brussels and, the kind of complexness of it. So maybe we can cut back on that, the red tape. Other countries have gone alone. Yeah, absolutely. And getting rid of any threat to Britain's military freedom. Again, we're not bound in to be, part of the European task force. We'll still be a part of NATO, but there are certain obligations we have to have by being part of Europe. I don't really think that's a major one, really, because we're much closely tied to, what America does. And, let's face it, they've got bigger guns and more money. So what we do with Europe is, fairly irrelevant, really. So we have to make our own mind up. So what we're trying to think is, I have then 10 points that are made, and they're just rough points, that they're kind of headline grabbers. What do we think? I mean, very difficult just to look at that at the highest level view and think what's fact. There's very little fact there. There's a lot of hearsay and conjecture. And even when it's backed up with figures, there's very little conviction in these figures. We don't know what's going to happen to food prices or what's going to happen to the bank. We're saying that there might be 100,000 jobs at risk in the city. Is that really a bad thing? House prices might come down by 10, 18%. Is that really a bad thing? Is it really? Is it really a bad thing? If you want the young people to get on the housing ladder, and house prices come down, everybody takes a little bit of pain for the greater good. See, you can look at these things two ways. There's not always a negative to it. So again, when you look at the leave, like most clubs, the EU charges a membership fee, and it's claimed that we can save about £55 million a day if we leave. So obviously, in reality, you flip it on its head, we get rebates. So if you look at the more clearer estimate, when we get our rebates back, it's more like £24 million a day we get back if we left the EU. Do you want £24 million a day coming back into the UK, being put into the NHS, that kind of stuff? Probably. I would say that's probably a good argument. Because you see, when you get these rebates and these subsidies back, you can only spend them on certain things. So it's not like you're getting all your money back. You're getting your money back on proviso of what the European Union says. So then there remain. Some of Britain's largest trading partners include France, Germany, and the EU. More than 50% of our exports go to EU countries. Right? Well, I mean, last time I checked, we're not exactly a massive manufacturing nation anymore. So it's generally services. So realistically, what are these arguments trying to prove? We get money in, we get money out, we can trade, we can't trade. This is what I'm saying. Even with some facts and figures, and the basics of facts and figures, even the average man on the street can't make an in-depth decision based upon what the people are saying. Okay. The question is coming through: what would be lose from the economy? More than 24 million. I mean, I don't know. I don't know. I mean, if you think about it, what would be lost from the economy? As I've said, are France, Germany going to stop trading with us because we're not part of the EU? No, it just isn't going to happen. I mean, it's not like we suddenly go from being in the EU and drop off the face of the earth. People still have businesses. There are still a lot of things to rely on. All this idea that we're going to lose, GDP, we're going to lose, huge sums of money by not being in the European Union. it has to be quantified. You have to start telling me. And if I don't know what it's going to be, then a lot of people don't know what it's going to be because this information just is pure speculation. You just don't know. There could be huge benefits, huge benefits in management restructuring, huge benefits in consultancy, the services that we rely on in the UK and we're some of the best at in the world. If you need to deal with a Brexit, well, you're going to ring PricewaterhouseCoopers, Deloitte. You're going to ring, some of the firms I've worked for in the past. Smart people that come in and tell you how you deal with things. Maybe we have to do, some infrastructure changes. Maybe, there's lots of legislative changes. Work for lawyers. Maybe there's some changes in building, I don't know, new detention centres or changing whatever. Or maybe we just go into a boom of housing. Who knows? Who knows? You can't tell me that it's just negative, that if we leave, there's only negative consequences. Because there will be positive things, but we don't have anyone smart enough on the leave that's bringing these through. There will obviously be some benefits by more money being in our own control. But is it an equal way up? I don't know. And that's the whole point, Andrew, isn't it? That's the whole point. That nobody can come out and say, for every year we leave, we'll be this better off. Every year we leave, we'll be this worse off. It doesn't match together. And this is what makes it so difficult. Yeah, and again, even when we break it down to basic things that people can understand, you're looking at a £55 million day savings. And as Andrew said, but what would you lose? And the risk on the other side is exports. We could lose out on exports. So which one do we want? Which one do we believe in? Which is going to make us the most money? Which is one that's going to make people's actual lives better? This is what we keep forgetting. We should be talking about quality of life. Yeah? Quality of life within the UK. Not always talking about growth. Right? You can't keep working people till they're 90 years old or whatever we're planning to do for the future just to keep paying for previous mistakes. We've got the opportunity to leave the EU, which in my mind is failing. It's failing miserably. Yeah, the rich are getting richer. The companies that function in the EU are getting away with more tax evasion. But the poor people, look at Spain's unemployment, Portugal's unemployment, look at Greece, are actually worse off. So the poor are getting poor, the rich are getting richer. And if we come out of the EU, we can control our small-ish country a lot better and try and distribute that wealth. That's my opinion. But if you're looking at it from the economic side and all about growth, you might see it differently. What do you want? A happier life or a richer life? Maybe you think they're the same thing. I don't know. But I'm just telling you, again, trying to say both sides and stay fairly impartial. I honestly don't care. I've had so much. I've just had enough. I've had enough of Mario Draghi, Mark Carney, the UK. I don't live in the UK, and I'm going to move even further away. I've had it with Europe, so I'll be leaving Europe and UK in the imminent future. I'll be taking me and all my money, all my pounds away, and I'm just going to go somewhere else because I can't be bothered. Stay in, leave, don't really care, to be honest. It's got to that point where I just want a better standard of life. I want to be around some better people, and I don't think that's in the European Union. I don't think it's in the UK. So I'm voting with my feet. That's what I'm doing. And I cannot be the only one out there that is sick and tired of this greedy, horrible culture that we've brought on ourselves. So make your own minds up. So easy to make snap decisions when you see numbers. But again, you've only got half the facts. So 55 million pound a day savings, but it's more like 24 million pound a day when you take into the rebate. And then, again, we don't ever actually give that money back or get it back. It never leaves our account. So it's just, again, bit of nonsense. So again, misleading argument. And then 50% of the exports go to the EU. Well, I mean, again, we're a massive service industry, not a producer. So what difference will that really actually make? Another misleading argument. So markets move 80-20. So 80% of the time technically, 20% of the time fundamentally. So all the talk we're talking about Brexit and all the speculation is fundamental. Let's see what the markets are actually doing. Let's look at a chart. Let's look. Okay, so what's really going to be affected? What's going to move the markets? Well, it's going to be pound, isn't it? Pound versus dollar, euro versus pound. FTSE, euro, dollar in secondary markets, and gold, another product of fear. So there we go. Here's the pound right now, okay, on a monthly chart. So we're towards the lows. Yeah, 139. I've said 164 is where the pound will be. So we're going to get back to 164. If we stay in the EU, and it's all good news, pound rallies. If we get out of the EU, we break 139 and it goes down. Who knows? Who knows where it'll go down to? So we've got lower levels, 138, 296 if we leave. If we stay in, 146, 151, 155. That's how you do it. Look at the bigger picture. Easy. So again, zooming in, here are your levels. If you're trading right now, we'll look at some live charts, but if you're trading when I did this presentation, pound was a bit of an upswing. So does that mean the bias has been formed? We all think we're going to stay in the European Union. We're all going to be happy, good friends, and people are going to jump in, protect the AAA credit rating of the UK, keep the pound as a reserve of choice, and everything will change just because we stay in the EU. So everything's brilliant, back to its best. Is that the argument? Failing schools, failing public services, crippling NHS, problems with housing, problems with education, unskilled workforce. I mean, not like we're the happiest nation on earth right now. So is more of the same what we want? Or is the fear of the unknown too unspeakable? And this is the whole point. Just because we stay in doesn't mean things actually get any better. So again, if you look at things like the euro against the Swiss. So when bad news happens, look at the sell-off that we saw in the Swiss when the Swiss removed their peg from the euro. So this is what potentially can happen in markets. We can see absolutely huge swings. Yeah, maybe we see even bigger swings. For the EU, if the UK leave the European Union, yeah, then are we going to see a massive spike down in the euro? Are people going to start buying the Swiss franc over the euro? These are different things and ramifications. The dollar will be affected against the pound. The euro will be affected against the dollar. Different markets will be affected just by this one vote because people will have different opinions on that fear and greed factor. So it's all down to perspective, I guess, for me. The markets will have found value before the vote, and they'll find it after. So buying good news, anything to do with the UK. You're selling bad news, anything to do with the UK. Same principles apply. Nothing's really changed. Okay, so again, what we're looking for is the FTSE. If we remain, we buy it. Okay, buy the pound, buy the euro, sell gold. Yeah, if we leave, sell the FTSE, sell the pound, hold the euro, buy gold. That's basically simple good news, bad news principles. Let's look at some charts quickly and just see what the markets are doing right now. So we've seen a bit of strength come into the indices. I mean, this is the DAX, for instance. So DAX is getting pretty strong. We've had a bit of a spike up in gold, but gold's heading down towards the lows now, back to 1,200. So we're looking at the pound. Sorry, guys. We're looking at the pound against the dollar, for instance. We can see, we've bounced off some low points. I've said in many webinars, I didn't know what would kind of happen to make some new lows here in the pound. But as the kind of yes vote that we're going to stay in the European Union, again, it seems to be bouncing off the lows. So on the monthly track, we've got these big levels to hit back for. And if everything the politicians have said, if everything David Cameron said, doesn't come to fruition, that we don't leave the European Union, so your house price stays what it is, wages keep up, everything's perfect, hunky-dory, why wouldn't people buy the pound? So as you see from the weekly, we've already been as high as 1.48, so there's every chance we can break that and go on as that yes vote to remain in the European Union carries on. Yeah, if it doesn't carry on, well, we know the opposite should happen. So we could get all the way down to 139 and below. Below that, well, I mean, your guess is as good as mine, isn't it, really? We could be getting down to 125. There's not always a negative case to be having a strong currency. All I'm saying is, 2 more years of austerity, 2 more years of recession, as they've said, whatever. I mean, the big thing they said that annoyed me was 10 years of uncertainty. Well, have we had 10 years of certainty before this? Absolutely not. Nonsense. So again, looking at the dailies, we seem to be in the chart really towards the recent highs, and that would indicate, wouldn't it, that people are voting that yes is more likely. We're going to stay in, and as we stay in, more demand should come in for the pound. And if you listen to my webinars over the many months and years, I've said the pound will get back to 164, which I said it would, and that's up here. So if you'd have bought low, as I've been saying, for that amount of time, you'd have done pretty well. So FTSE, I guess, is the next bit on. FTSE was never really comfortable at 7,000. We didn't do long. So, and a lot of rejections, obviously, though. It seems to be ranging between 6.5, and that's where it seems to be comfortable. If we leave, I reckon the FTSE will get all the way down to maybe 4.8. Okay, we might range between 4,000 and 5,000 for the foreseeable, for the future. If we do leave, maybe that's the way the markets will work. Even if we remain in, I don't think it's positive emphasis enough to start getting back and holding above 7,000. If you look at the FTSE dividend, over 71p owned by a company on average in the FTSE is given out. So companies in the FTSE 100 are woefully under reserved. Look at Marks and Spencers today. Big drop in profits. What's the first thing it says? An emergency dividend to its shareholders. So companies are just playing with imminent doom. So the FTSE, anyway, regardless, even if we have a spike up and we stay in, the FTSE is still going to hit maybe as high as 6,500, touch higher if it's deemed as amazing news. But towards the end of the year, we're breaking below 6,000 and heading back towards 5,500 and 4,500. To be honest, I think it's going to stay there for some time. And don't tell me it can't happen. Look at oil. Look at other things. Anything can happen. I think we've really glutted on stocks with the quantitative easing, with the asset purchase buyback facility. At some point people have to pull out and put the money back into cash and normalise the economy. It's not just the only measure of strength a stock market. It's a very old-fashioned way of looking at things. So obviously the FTSE, I think the pound we've gone through. Gold, again, interesting. Gold, that 50% level of the fib could be tested again. I don't really know what gold has to do to get back to these upper levels. I just don't see there being enough money left in the world to push gold back up. So I can only see it creeping down. And again, 1,100 and we break 1,000. And I think it's going to take some time now. But if there was true fear in the world over Brexit, over the price of oil, over everything else, then we'd be a lot higher than we are now. So we've really been in this tight range, between 106.2 and 1306, which is a relatively tight range for things these days. And really, for me, we're ranging sideways. Sure, we've broken this trend I've had in for years, but again, we could easily get back down to 1153, maybe a small bounce, and then further down. I still think $1,000 is where gold wants to be and below. So I'm not going to change that opinion. I'm certainly not going to change it on the back of Brexit, that's for sure. So there we go. I mean, I've kind of gone through some high-level points of the Brexit. A bit of a comparison between the Scottish referendum, the most recent thing for me, and like I said, there's no strong argument for, no strong argument against from an absolutely pure factual basis. A lot of conjecture. So I guess we're kind of down to our own decisions. If we stay, everything's great. If we leave, everything's doomed. Again, I don't even see it being as clear-cut as that. Has anybody got any thoughts or questions, guys? Anything you'd like to ask? I mean, these things are immensely complicated, and I do, go through a lot of things, and try and give you a lot of ideas, but I only have 45 minutes. Andrew's saying, like the versus Scotland analysis. I mean, again, it's just looking at the past. If we're looking at the past in technicals, that's what we do, don't we? We go through the previous incarnations of charts and we see what happened in the past to predict the future. And I'm just trying to relay the fact that people are people. People are people, and the majority of people that are on this webinar, which is a lot of them, are just sheep. They want to be told what to do. They don't want to be frightened. They want their lives to continue as is. And I'm saying it's not as dry cut, well, as clear cut as that. Even if we remain in the European Union. I mean, what's happened to Scotland since they voted no? Well, they've pushed back to the queue in a lot of things in political terms. They keep witching on about a new referendum. They haven't really got any clout anymore, any kind of momentum. The wind's gone out the sails. So that could happen to the UK. We could have little less power in Europe because we're not taken seriously, because we know we're a beaten nation when we say we're going to stay in the European Union. So it's not all clear cut that it's going to be better for us if we actually remain in. Can we see a euro-pound parity scenario? Well, I mean, the euro's always been doomed for me. For the last couple of years, I've said sell every high. I don't really see that, changing anytime soon. I mean, I just don't like the euro. I don't like anything about it. I don't like anything about the European Union. I've lived in Spain for 8 years. I know it better than most, but I just don't see it pulling itself out of this problem. It's a social problem. It's not just a monetary policy problem. It's a problem that they don't know what they're doing or what they want. I don't think you're going to see parity. I just don't think it's got enough power in it, to be honest. If you're looking at, the kind of up move, we're really still below this 50% here. I just don't see what's going to push it. I don't see where the world demand's going to come to bring people buying that euro over the pound, even if we were to leave the European Union. I mean, I just don't see the market being strong enough to get back to that parity. I just don't see it being a big enough impact for people to dump the pound and buy the euro. I just don't see you get the security. The negative deposit rates, the problem with unemployment. Countries like Turkey, etc. Trying to apply to be in the European Union. I just don't see how, even if we left the European Union, that once a great empire, a great country still would still be looked as a second-class citizen compared to the European Union. I just don't think there's enough downside scenarios, enough real investors out there to hammer the pound enough to get it back to parity. So no, I don't think that would happen. But great question. These are the kind of questions that we want. These are the kind of questions that we should be asking on Question Time. On people trying to understand the implications of what's happening in the markets. Not asking silly questions. We should be thinking about the ramifications of what happens in the wider economy in longer term, not just 2 more years of recession. Who cares about 2 more years? It's nothing. Think about the next generation, the next 2 generations. Yeah, that's what we need to be protecting, our values. And being in the EU, they get eroded. And that's just a simple fact of matter. Look at the diversity of England now. Look at if you go to an average primary school, you've got some schools now with kids of 17 nationalities. I'm not saying it's a bad thing. I'm just saying it's a change. And we have to deal with these changes. But you don't go to, many of the European states, do you? And say, and see the same effects. England's been and the UK's been very accommodating to people. But it gets to a point where you can't be everything to everyone. Don't know, guys. Very, very difficult, very interesting. I think once June the 23rd comes, we'll certainly have an answer. I don't think we'll have any answer to what the actual outcome of this will be and the ramifications will be by any stretch of the imagination. But at least we can stop talking about the what ifs and deal with what's going to happen going on. Well, listen, anything else, get me on Twitter at Steve Ruffley. My email is sruffley@tradermaker.com, or just get me on my get me on my FX Street page. As always, guys, been a pleasure, and good luck trading. Let's see what the markets bring, and I'll speak to you all very soon. Okay, thanks for attending. Cheers, guys.